Hi guys, today we're going to talk about Michael Burry's super short position on, for my opinion, the US economy. We have a deep insight inside his science portfolio, which is his asset management portfolios, and what are his holdings, the long ones and the short ones, and we'll try to analyze and understand why his positions are as they are. So let's dive in. We can see his portfolio. I'll send the link later to see how you can look at this and see the changes which he reports once of every month. So we'll see the main long and short positions on many assets. There are many more. This table I only put the main ones with the most heaviest positions, and we'll start to dive in on the more optimum ones and the long ones, and after that we'll get into the short and the real problems behind it. So the good news are we have long positions on both Google and Facebook, the technological giants. They have 20,000 call units on Google and 550,000 call units on Facebook. They are both count for more than $0.3 billion, and which is super positive. Let's have a look at Google and Facebook graphs. Here in Facebook we have a great graph. It's a weekly graph. We can see since 2019 has been really a long and good ride, and today it's about $363. Lately they have published very good reports, and they try of course to solve their problems with Apple about the tracking cookies and so, but they are as the same, have great income and cash flow, and it's an amazing company. The next one, Alphabet C-Class, which is holding the Google company. So we can see that same as Facebook, since 2019 it has been all climbing. It's very good, and recently they also have been reporting very good reports, so it is a hold position and for many years to come. Let's get back to Michael Burry's position. Here we can say that he has a very long position on Kraft Heinz. It has more than 1 million call units, which is about $50 million on Kraft Heinz. It's a food giant, and it's of course going to be like this in many years to come. Let's have a look at their recent graph. So the Kraft food, it has known a downside and upsides, but overall it's in a very good graph. It's a weekly period, and we can see it goes up and up and up. And the latest news from Kraft Heinz, it reports quarterly beat, but the shares felt it's only a matter of momentum. But it is a great report, and it's a great stock to hold, so we can understand this long position. Now we're going to get not so optimum opinion. We'll see a great pessimism from now on, so keep tracking. We have a great big position of short on Tesla. Right now there is 800,000 put units, which accounts for about $500 million of shorts on Tesla. Why is it? Let's see at the graph, at the weekly graph. We can see that Tesla has been in a ride from about $46 only in May 2019, and it now accounts for about $700. A few months ago it broke the 800s, and since then we can say it's a really steady stock in the company, but we can see that we have something going on. So Tesla had been a great ride for early investors. Of course, they could have seen amazing revenue on it. But we can see that the Tesla also has great competition, and we can't see how it can on this market cap with this PE ratio of 365 can really give back all the good investment for all the investors. So that's why Michael Burry sees the great short on this market cap. And let's get back to what I think is the most pessimist outlook on the US economy. So we have a great short on the Treasury Bonds, on the US Treasury Bonds. He has two holdings, very great holdings, iShares 20 plus U Treasury Bond ETF and the ProShares Ultrashort 20 plus U Treasury. One is long and one is short, but on the long iShares it has a short position of more than 1 million put units, which counts about $0.17 billion. And on the short ETF it has more than 2.5 million call units, which counts for $0.05 billion. Together it counts for $0.22 billion of short on the Treasury bonds. So this says that Michael Burry said, I think that the Treasury bonds are super pricey, and for the situation of the economy it is not possible or reasonable that this situation can hold, because we are talking about super inflation and the money doesn't worth it, and of course the interest rates of zero and realistic minus interest rates, it cannot hold. So this is why Michael Burry sees the great short on the US economy. Let's see this graph, and of course you can see that the iShares only sees highs and highs and highs. But let's look a bit in the history, where it is the lowest on 1913. It has been $100. Since then it went only up. So try to understand that the market cap is almost $20 billion, and we can understand that the short on this market cap can lead to huge gains. Of course the question is when it is gonna come. It could be next week, and it could be in 3 years from now. And of course all the ProShares ultra short, because it is short on the Treasury bond, we can see that it only declines. So now the person who bought it before is losing money. So losing money and holding a treasury, an ETF that only loses money, you have to pay the interest for holding this position. Of course on Tesla it is the same. So unless the big short is going to come in the next coming period, it is a money losing position. But we know that only with patience and with long hindsight we can understand that Michael Burry doesn't just invest his money and hopes for the best, because he understands when any unrealistic situation eventually will blow up. Thank you for staying with me. If you have any more questions, leave it below.